Okay, welcome into my InvestEngine portfolio update. Now for the month of November. Can't believe how quickly this year's gone. Calendar year's almost finished and we're almost all getting excited for the big C word, Christmas coming not too far away. It's been an interesting month in the stock market as per usual. You would have seen October, this last month we've just been through, actually ending pretty poorly indeed, kind of continuing that trend from September. Just having a look at the S&P 500, for example, as a good gauge of what's been going on in the stock markets. You can see the S&P 500 was 2% down, which kind of continued that terrible performance from September. Typically, October, November, and December are actually quite good months in the stock market, with September having that average negative. It's quite funny, actually, because everyone knows the stock market's going to be so bad in September. I guess, does that mean that they keep making it very bad and people expect it to be bad? Who knows? Anyway, that's what typically happens. And then the rest of the months in the rest of the year tend to be pretty good. And then we get that end of year buzz, that kind of Santa rally, as everyone calls it. And we'll see how that goes in the next month's update when we do that. If fingers crossed, it actually goes in the one direction. Now, just before we jump straight into the portfolio itself, you would have seen generally how the market's had a pretty good start so far this month. And a lot of that has been down to the fact that all the big companies, and most of the companies in the S&P 500 at least, have been showing us their earnings for the past 3 months. And those big technology stocks, especially with everyone had their eyes on them, have actually done relatively okay. I think you'll mostly agree. Just picking out one of the big companies, Microsoft had a particularly good earnings season, showing particularly good growth and beating lots of expectations that the analysts set out there for them. Now, you would have think a company like this, it just can't grow any bigger. It can't keep delivering these cash flows, but seemingly Microsoft is on an unstoppable rise and actually is now at some new all-time highs, interesting enough. Now, on the flip side, not everyone did particularly well. Tesla had a bit of a ropey earnings season. Their stock fell very, very sharply and very, very quickly, as you may have seen, and fell below that $200 mark. Now, as you might see on screen now, it has actually risen and kind of gone back up with the rest of the market, jumping again over 10% from those lows, just showing the kind of volatility you have to put up with if you are an investor in those fast-growing, exciting companies. Now, from another perspective as well, don't forget Nvidia has their earnings on 21st of November. Now, that company has had some extraordinary share price growth over the past year to date. I'll put that one on screen now. Can that continue? Who knows, but it will have to beat those expectations and continue to beat those if it stands any chance of outperforming the market. Then Apple as well, the largest company in the world according to market cap, had a pretty okay earnings season, I guess, nothing spectacular. Revenues actually declined over year to year, which is quite an interesting one. It's very difficult when you are a company this big to show that growth because the revenue numbers we're talking about are just extraordinary. But really what a lot of people are now focusing on is their services revenue growth. So that's kind of iCloud, Apple TV, etc. I know for me personally, I spend, £30+ a month to get my iCloud updated, Apple TV, etc. You also get the arcade and all the other things for your household, so you can put them on multiple devices and multiple people. But they make a huge amount of profit of those compared to the amount of profit they make from iPhones, iMacs, etc., which were on a slight decline, even though the iPhone 15 sales have been particularly well. Other hardware is down, like MacBooks, for example, and those wearables and other consumable devices. Anyway, we'll see how much excitement lasts for the next couple of months. For now, though, let's jump straight into my portfolio and see how we've been getting on. So I'll just jump into my portfolio now. As you can have a look here, my £1,000 regular savings plan direct debit has gone into the account and we're now set at a total of £12,286.67p. Now, as I've said before, I would like to be able to max out my stocks and shares ISA, but that is a lot of money to be able to do that. I do stay pretty frugal in the rest of my life. Lots of people might be wondering how I'm able to afford that, but I do keep the rest of my costs pretty low. My investing is my biggest cost by far. And, I may adjust that up or down depending on how things go with the business and how things go moving forward. But for now, I'll try and stick with that as much as possible. Remember that you've got £20,000 you can put in per tax year across all of your different ISAs. I don't use any other ISAs. I don't use a cash ISA. I don't use a lifetime ISA. So stocks and shares ISA is where I focus all of my earnings and all of my investing. So I'll see what I can do. Of course, the tax year is only until the end of March, so we still have some months away. If I can find some spare cash or find some additional money, I'll try my best as I can, because once you go past that new tax year, you do lose it. You can't backdate anything from a stocks and shares ISA perspective or any ISAs, so just be aware of that one. Now, something I was going to bring up this month is quite interesting, actually. You can see here on screen, if I adjust this by months, this black mark shows when I've actually put money into the account and I have it just set up to the first of the month. Money goes in and then it gets automatically invested into the portfolio. You'll see what happened during the end of last month. Actually, the account was up at kind of 11,400 there, actually then dipped to negative territory. And actually, I did get a pretty good buy point actually when I put the money in. And then, of course, we've had a bit of a rally since the money's gone in. That's not because I'm some kind of magic market guru timer or anything like that. this really just shows that sometimes if you are just going to be a regular long-term investor, sometimes you'll get lucky and other times you'll get unlucky. Sometimes you'll buy right at the top of the market and other times you'll get really, really good timings. The key thing for me as a long-term investor, again, when we zoom out, is to make sure that you're getting that market average. So no matter if times are good or bad in the stock market, that you make sure that you follow your own plan. That's a really, really key, important thing. You definitely can't do well in investing if you're only buying when things are really good and things are on the way up. You have to have that mindset that says, even when things are looking bad and everyone else is telling you that investing is a really, really bad thing to do, that you get your money in there. Again, especially if you want to build up long-term wealth. And just going back to that, one of the things for me at least, which makes investing easier and boring, which is actually quite a good thing, is to make sure I have things personally automated. So I don't want to come to the end of the month and think, right, how much am I going to invest and what am I going to do? I just want to have a fixed sum of money that goes in every single month without fail. And eventually as well is to be able to grow that amount of money. That's something we don't talk about much when it comes to investing. We say, okay, I want to invest, like for example, £100 a month, £200 a month into my account. But actually what you really want to be doing is focusing over many years is to be able to increase that, not only just with inflation, but if you can increase that as well. For example, if you get paid more money in your job, and as you get older as well, it's a really important thing to do because £100 now invested won't be anywhere near the same as £100 invested in 10 years time, for example. So you've got to have that inflation in the background and think about that just when you are planning your investing. Now, in terms of performance, remember this account hasn't really been going on for very long at all. And we're currently up 4% here at £264 in terms of our current returns. Remember that when we are talking long-term investing, this is something that comes up now more and then in the comment section and quite a lot actually, is lots of people say they've been investing for 2 or 3 years now and actually they've made no money at all. If anything, their account is pretty much just level. It's done nothing at all. And they think, well, my money probably wouldn't be better in a cash ISA or just better in my bank account getting 1 or 2% or something like that. And while that would be true, in the long term, cash ISAs or any kind of investment like that is never going to beat anything. But unfortunately, in the stock market, 1, 2 or 3 years, it's not really a long enough period of time. And if I just bring up a chart now, for example, just look at the S&P 500. Over the last several years, for example, it's done really not much. If that's your investing time horizon, unfortunately, it's very, very easy to kind of get despondent and then not worry about investing. But really, you have to stick through those times. Otherwise, you can't get the upside on the way up. Now, with investing, nothing is guaranteed. Absolutely nothing is guaranteed. Investing in the way I do as an index fund investor, the only thing you're guaranteed is the returns of the market. The returns of the market in 2, 3, 4, 5 years, not guaranteed to be positive. They could also be negative returns as well. But really, you have to trust in the process and trust in the fact that your money has a very good chance, or has its best chance really, of growing at least above the rate of inflation in something like the stock market. But you do have to put up with that volatility. And I know it's something very easy to talk about, especially when the market's going up. It's especially very, very hard to do when things get tough. And no doubt this will come up more and more and more as we go through the years. And I'd love to be able to come back after many, many years and go back through these videos and show people some of the pain that you have to go through as an investor. And then just on that point, when you try and remove your emotions from investing, that's another good reason why for me personally, remember I'm not your financial advisor, so please do something that figures for your own success and your own plan, but really just automating that process month in, month out, no matter what the market does, just have that nice and simple and you're less likely to go crazy and tinker with things because I definitely have that impulse in me that would happily tinker and play around every single day. And I know that would be very bad for me. Now, let me just actually go into the investments. I realize I'm not showing that at the moment. Let me just scroll down here. Very simple portfolio, as many regular viewers will know. You have the S&P 500 kind of representing my US kind of style. You've got the Developed Europe Fund, you have the Emerging Markets Fund, and you have the FTSE 100. You can see the percentages here as well, how they're allocated. They are very roughly aligned to what a global index fund would give you. They're not perfect, as many people in the comment section do kind of point out, and they're absolutely right to do that one. There is no Japan, for example, in this one. Could add that one in the future. Not too fussed at the moment. I'm fairly happy with this one. I can be flexible if I want to, change things out. There is a tiny bit of an overweighting there to the FTSE 100. You could absolutely argue. You could also argue that the FTSE 100 doesn't represent the UK at all, which it really doesn't, because lots of these companies, do business internationally. So. But for me, for the time being, yeah, it suits me absolutely fine. And also, especially when you see these red numbers at the moment, a lot of you might be thinking, well, why don't you just go all into the S&P 500? I do think in the very long term, it is very good to be diversified, not just within the S&P 500 or in that US market. I think especially if you're based outside of it, there's a huge number of risks, even though the S&P 500 does have some international diversification. For me personally, I would like to also invest in areas which people forget about and think there's no growth left at all. Because actually, as you'll know, this is a pretty good indicator and a potentially powerful indicator for what might happen in the future. In that when areas of the market or companies, for example, when the sentiment is really, really bad, when people think they're going to go down, actually, when they're at their weakest and their share price is at the lowest, is a good opportunity as a long-term investor. Now, individual companies, anything can happen, but when we're talking about kind of global markets like this, it's a very good time to make sure that regardless of what the numbers are, for me personally, this is a good time to buy because I like to see the fact that I'm basically getting a discount, and I kind of had to switch that switch on your head and make you realize that it's good to be able to buy when there is a discount rather than when things are only green, because then really you're just buying out FOMO. On that note, with the portfolio, many regular viewers will know that I do share this portfolio, so I will leave a link in the description below, and also a link in the description below if you want to start your own stocks and shares ISA on the InvestEngine platform. You can get a cash bonus between £10 and £50 once you deposit cash into your account and get everything set up. Remember, terms and conditions do also apply. Check them all out down below. And thanks to the many, many people who have already signed up using that link and got themselves some free cash and got themselves started investing. Hope it's going well for you so far. Do let me know in the comment section below. Now, a final point I will make, regular viewers will already know this and probably think, well, this is very boring, blah, blah, blah. But I do also have a second portfolio with no cash in it, but it's really just created it for you guys out there. If you were looking for a kind of a portfolio or an idea that you could maybe start and do your own research, this is another portfolio that I do have shared called Index and Chill, which one day I will copyright and definitely put on some mugs and t-shirts. It's represented by a single ETF, which pretty much is a global index fund, the Vanguard FTSE All World. This version also just automatically reinvests dividends, so you could quite happily, invest your money every month in an index fund like this and just leave it, and everything will be set up for you in terms of not having to worry about any rebalancing or anything like that. Everything's done. So again, that one will be shared in the comment section below, or the description, I should say, below for you. Anyway, just as we close things up, I'll leave everything up on screen now for you. I will also put up a thing above my head here. I'll put up a playlist of all my portfolio updates. I share everything publicly on YouTube, so you can go through every single month, how I've got on, how I even started the portfolio in the first place. And I also do the same over on my Vanguard one too. Don't forget to check one out. And as always, thanks so much for watching. Happy investing.